What is going on, you guys? Nathan here from NathanArgenta.com, and in today's video I'm going to share with you my $5,000 dividend portfolio and how I've grown it over the past 4 months from September of 2019 up till now, January 2020. How I've grown it by 9.75%, just over $300 earned. Share with you the exact portfolio, the 100 different stocks that I have in it, the different sectors that I'm investing in, and really just show you the progress and how I've grown it up till this point. So one way you can follow along with me just by obviously watching this video here is also by going to the link in the description below to my exact portfolio. I'm building it through M1 Finance, which is a great platform. I highly recommend it. So going to the link in the description below, you can follow along on your computer and see my portfolio and even save it to your bookmarks so you can follow along later at another time as well. Now, before we get into the content of the video, real quick, if this is your first time on my channel, welcome. We talk about everything marketing, entrepreneurship, and investing, all while helping you have more fun, freedom, and fulfillment in the process. So if that sounds like you and you're interested in getting more videos on these topics, I invite you to go ahead and click the subscribe button as well as the bell notifications button to get updates of any time I come out with new videos here on my channel. All right, so again, today's video is about the $5,000 dividend stock portfolio that I have with M1 Finance, how you can follow along, see the progress and the return that I've made on my money. But then also, more importantly, the purpose of this video is to really not just share my portfolio right now, but wanting to build my portfolio over time and create videos just like this one that you're watching of my progress each and every month, any updates or changes, whether I'm adding different stocks or removing them, as well as adding or removing a sector on my portfolio. And just following along, seeing my progress in the portfolio and the changes each and every month. So I do plan on creating videos just like this one each and every month. So depending on when you're watching this video, whether it's for the first time, this is the only video I have, or if it's months or years later, going back to my channel after watching this one and just seeing the other videos that I have on my portfolio, how it's grown, the changes that I'm making. And again, you can follow along. I encourage you to subscribe to get updates of any time I come out with more videos. Specifically, if you're interested in this video on my portfolio, then you can get updates of when I come out with videos just on my portfolio. So again, that is totally up to you. And then also, the link in the description to my exact portfolio with M1 Finance. You can follow along, get updates and changes even there as well. All right, so what we're gonna do next is jump on my computer and I'm gonna share with you my dividend stock portfolio through M1 Finance. Hey guys, Nathan here. All right, so this is my M1 Finance dividend stock portfolio. Now, what I wanna go over real quick is a disclaimer. This is not financial advice. This is not, I'm not a financial advisor. I do not recommend or say that you have to buy any of these stocks or follow along the exact copy and paste portfolio that I have and invested in these stocks or sectors. So you may make no money, you may make less money, you might make more money than me, you might lose all of your investment. But ultimately, at the end of the day, this is at your own risk. This is your own money that you're investing in. But we can't predict the stock market. But for the most part, history through dividend stock investing is a long-term growth strategy. It does produce great returns and good returns over time, but you have to be patient. You have to be able to have patience in investing in this strategy. All right, it's a long-term growth strategy that's going to help you compound your account and build passive income. Okay, so this is my passive income strategy. So just want to throw that disclaimer out there. Now, again, follow along on this portfolio. You can go to the link in the description and follow along through this video together. Now, this portfolio is broken down right now, mine, in multiple different sectors, which I have here included below. I have it broken down ultimately in these sectors because I feel like these are good for long-term growth. They're good for even through a recession. Okay, if a recession does come, we don't know when it's going to happen. Could be this year, could be next year, could be 5, 10, 20 years from now, who knows. So I just feel like these are good, even recession proof, my opinion. Okay, not financial advice, but they're going to be good. So even if the market dips or I lose money and there is a recession, I'm confident and feel like these won't lose too much. But again, it's a dividend investing strategy, so these are still going to pay us dividend shares and pay us a yield percentage by owning stocks. And even if it dips and we continue to invest in it, we're going to get a better value for each of those shares or stocks. And then when it comes back up, we'll get a better return over time. Okay. So I have it broken down just for these reasons, or for those reasons. The first one I have is through real estate. Right now it's at 20% of my investment in the portfolio. It's returned 5.7%. Finance is 7%. It's about 15% of my portfolio. The tech fund has returned 17% roughly, and 9% of my portfolio. It was at 15, but I've lowered it since starting it, just because tech has grown. It's the second highest in growth compared to healthcare by 17.08%. The reason why I lowered it was simply because most tech stocks do not pay a high yield. They pay very low yield. And there's a lot of them that don't even pay a yield. All right, but they have grown the highest over time. I do have a retirement account, an IRA, a Roth IRA, and the tech one's grown like over the past 2-3 years for me by like 38-40%, which is awesome, but they pay low dividends. All right, I want that compound effect through dividends. So that's why I lowered the target for my portfolio by down to 9%. The next one's utilities. It's produced 7.6%. It's at 13% of my portfolio. Utilities, I think, is going to be great, not only now, but for a long term, just because people have to pay their utility bills. They're going to need utility bills. Residents and businesses, commercial properties, they have to have that utility in their lives. And utility companies are different from energy. Utilities are more natural gas and even solar. So a lot of them are, I feel like, the future, and they're innovative companies. They're following with the times, where energy sectors, which I don't have in my portfolio at the time, energy is more like your gas and oil. Okay. Healthcare has the highest return so far in the 4 months that I started this portfolio, 17.69%. And right now it's at, the target is 14%. I did have it at 12, so I increased it just because it's done so well. And I feel like healthcare is not going to go anywhere. It's only going to continue to grow as people, are investing in it, and more companies are growing, and more people are getting older or getting sick. And technology now in healthcare is tremendously growing. So as technology sector grows, I feel like the healthcare sector is going to grow with it, because there's a lot of health tech stocks out there. Okay. Or healthcare companies investing in technology. The consumer fund. All right. So this sector has produced 7.76% up till this point. It's 11% of my portfolio. I did have it at 12. I just lowered it to 11, ultimately because I made a change in communications and wanting to put more in that stock, in that sector. Bonds, 2.7%. So this is the lowest return that I've had, lowest gain. But bonds, what it's going to do for you is, this one is going to be only broken down in 2 stocks, but this one's going to pay a higher yield for the most part. So it's a good long term, and it's also just diversifying our portfolio even more. It's a long term strategy, higher yield percentage. And then communications. Oh, sorry about that. Communications is at 10% return, 8% of my portfolio. I did have it at 5, but I've grown it to 10 just because I feel like those companies are doing well, and just through news and different reports and advisors and stuff that I follow, and just through my own research, communications have done well, and I feel like we'll do well just simply because of the evolution and innovation of 5G technology and the changes that should be happening, they said, in 2020. So I feel like those companies with 5G technology are going to be innovative and continue to grow. All right. So that's how I have it broken down. Now, to dig in a little bit deeper into these sectors, I'm just going to click on them real quick. And again, there's a link in the description below. You can look at these exactly on your own or at your own time, or if you're looking at this video at a later date, you can look at my portfolio and the updates that I have. So these are all the stocks I have in real estate, and how I have it broken down, and the return all time on these stocks. And these are all broken down in multiple different sectors for real estate. Some of them are tech REITs, some of them are actual physical, like commercial or apartment complexes, multifamily housing, healthcare or health REITs. All right. and some of them are advertising REITs, some of them are storage, storage REITs. So multiple different sectors invested in the real estate. Now, I picked real estate just because, for the most part, REITs are going to have a higher yield. Okay. Finance, these are the stocks that I have in my portfolio, which I'm sure you've heard of: JP Morgan, Wells Fargo, PNC Bank, Bank of America, Aflac, Discover, etc. Okay. So I have a lot in that sector as well with finance. Tech, this is everything I have broken down in tech. All right. These are the slices that I have. So like I said, tech usually, for the most part, growth wise, has been really growing really well, one of the best sectors. But from a dividend standpoint, it does pay usually one of the lower, if not the lowest, just because those companies want to keep their money. They want to reinvest it, not in their shareholders as much, but reinvest it in technology and programs and updates, and continuing to be innovative, or even buying up other companies to add to their portfolio, or to acquire another tech company. Okay. Utilities, these are the stocks I have in my utility sector. All right. Healthcare, these are the ones I have in healthcare at the moment. So I'm sure you've heard of Johnson & Johnson, and then most likely United Healthcare, and then CVS. All right. Now CVS I just added, that's why I don't have anything there. I just added to my portfolio over the weekend. Consumer, these are all the ones I have in consumer. P&G, Darden, like the Longhorn restaurants, Cheddar's, Olive Garden, etc. Target, Home Depot, Coca-Cola, Disney, Dunkin' Donuts, Hasbro, Costco, Dick's Sporting Goods, and so on. Okay. Next is my bonds. So these are the two that I have. This is a long-term bond investment. This one is like an income portfolio investment through bonds, all right, that pay bonds. So I just invested in this one too. That's why it's so low. So as I invest more, it's gonna evenly distribute that money in those shares over time. Okay. And the last one's communications. These are all the ones that I have in my communications sector, all the stocks, how I have it broken down. All right, so these are all the communication ones in that sector, and like I said previously on some other ones, I just added this stock as well. All right, so those are the stocks that I have. So just kind of break things down a little bit more for you. What I'm going to do is go to the actual pie that I have and break down these 100 stocks and the percentage. So right now, the 100 stocks in my portfolio, the yield is 3.8%. Expense ratio is just from the bonds that I have, so a little bit of an expense, but it's very, very low. 3.8% is really a good average, a good dividend yield growth over time. And then this is, if I started 5 years ago, how much my portfolio has grown just on the growth, not on the dividend shares and the dividends that I'm getting paid out, and that compound effect. So that's even more money. But this is if I just solely got a growth return on my investment in those stocks without the dividends being paid. So this is not this is not what could happen over the next 5 years. You could make less money, you can make more money you could lose money. But ultimately, this is how it's performed. So history can repeat itself, but also it cannot. So it's not, like I said, advice that it will repeat itself. You can't predict the stock market. You don't know what it's going to do. But this is just what it has done over the past 5 years in all the 100 stocks that I have. All right. Now, M1 Finance is a great tool. Like I said, you can invest in multiple different companies. I like picking ones that have a good yield percentage. Usually 2 to 5% is a good yield percentage. So when you're looking up stocks on the stock tab, you can look up the percentage by 2.2 to 5%. Like I said, it was just what I recommend. You can do 1 to 3, you can do 3 to 7, 8, whatever you want. Usually 10 or higher is a higher yield and more of a risky stock, but ultimately that's completely up to you, at your own risk. So those are, like I said, that's the dividend tool that you can use. You can pick the sector you want. So say we do consumer defensive. All right, you're picking that sector. It's going to show you the growth, say, of Coca-Cola over the past 3 years, past 5 years. Okay, so it's done the most over the past year, but it's paying 2.81% at the time of this video recording. Okay, say you want to go into healthcare. All right, same exact thing, 2 to 5%. It shows you a breakdown of all the stocks in 2 to 5%. All right, the performance over the years. Show you one more here. Real estate, 2 to 5% at 1 year, 3 years, and 5 years. Okay, so do your own due diligence, do your own research. The nice thing is, as you're using M1 Finance as well, and you're kind of doing more research, you want to learn more about a stock. So something I did, for instance, I have right now, Tower in my portfolio. So I did more research. It does pay about a 4% yield. But the nice thing is that M1 Finance at the bottom of these stocks, when you go into it, have latest news and updates and reports from high authoritative financial advisors or article websites and blogs, that you can get updates and information further on previous performance, current performance, and maybe the future performance of the stock and what other investors or companies are doing, and how well it does with paying dividends. Okay, so that is something I do like about M1 Finance. It's very user friendly. It gives you those articles right there on the spot, and being able to look at the market as a whole. Okay, so again, this is my portfolio. This is completely up to you. If you want to follow along, invest in the same companies, some of them, all of them, 25, 50, whatever you want to do. The nice thing with M1 Finance too is you're not having to pay the full amount for a particular stock. So if you want to invest in Apple, actually, sorry, let me go back to the stock. So say you want to invest in Apple. All right, so currently at the moment, Apple is $317, sorry, just to invest in one share. Okay, so what you can do is M1 Finance will give you a share based off the amount that you want to invest in. So you don't have to invest the full amount to own a percentage or to get paid a dividend. Just say you put $30 in Apple, you're still going to get paid on that growth and on the dividend yield of that $30. So that's something that this tool with M1 Finance does that other platforms don't do, from what I'm aware of, like Ameritrade or even Robinhood at the time. I did invest in Robinhood, but then I got away from it because they didn't have that in their tool. So that's my portfolio. Follow along if you want. Again, link in the description. You can follow along. If you get started with M1 Finance, you will get $10 at the timing of this video, $10 for free just by using my link and investing in your portfolio through M1 Finance. And just also make sure you hit the subscribe button. That way you stay up to date on these videos that I'm doing over time. Stay up to date on my portfolio. And just getting any updates on other advice on marketing, entrepreneurship, or investing that I do. And if you did enjoy this video, if you got value from it, let me know in the comments. Smash that like button, leave me a comment below, letting me know the value that you received. And anyone you think that would be interested in this video and my portfolio, share this video with them. Just that way they can get a good idea of maybe a strategy that you're going to implement, or something new that you want to do, or someone that could receive value from this. Just share that with them as well. Okay, guys? So thanks for tuning in. Thanks for following along, and I will see you in my next video. Make it a great one.